This is the Asia Trade. I'm Haidi Stroud-Watts in Hong Kong.
I'm Shery in Tokyo. We're live outside of Japan's national parliament. As a ruling coalition loses its majority for the first time since 2009, we're watching the Japanese yen and stocks when trading opens.
The other stories we're tracking today: Brent tumbles as Israel strikes on Iran, focus on military targets avoiding Tehran's oil facilities. We're live from Hong Kong's FinTech Week, where we'll be hearing from Tom Farley, the CEO of digital assets exchange Bullish.
Heidi, it's a very consequential Monday morning here in Japan. I'm in front of the National Diet. Japan's ruling coalition has just lost its majority with the Liberal Democratic Party plus its ruling partner Komeito falling short of the 233 seats needed to form that majority and be able to maintain Shigeru Ishiba as prime minister. That's the big question right now. Will he be able to form a coalition government, what the government might look like, or he might have to resign? In the meantime, uncertainty for politics, uncertainty for the markets. Japan's yen already at the lowest level in 3 months against the U.S. dollar. And of course, we are also expecting Japanese stocks to trade lower, as well as we have a Bank of Japan decision coming up on Thursday.
Shery, it is a busy start to the week with politics and geopolitics in focus, and we continue to watch the situation in the Middle East, of course, after the progress that we saw over the weekend when it comes to looking at these resumption of hostage talks between Gaza and Israel, but also, of course, the attacks on Iran. A little bit of relief when it comes to oil markets, certainly, because we did not see key infrastructure in that respect being targeted, but we have seen, of course, Iranian officials saying that an appropriate response would be forthcoming as well. It was interesting what we saw when it comes to trading in Brent crude, that sort of fall really in reaction to the relief and perhaps the refocus now being on the supply side outlook and, of course, the demand outlook as well when it comes to going into 2025. And the China recovery story remains pretty key when it comes to the psychological state of energy markets at the moment. Take a look at how we're shaping up. It is a big week. It is the week before we get that Fed decision, of course, and a number of key data points will be sort of informing how market expectations set up from here. The PCE is a big one in terms of that inflation gauge, the Fed's preferred gauge, of course, but also jobs numbers. We're expecting to see something of a turnaround when it comes to the number of jobs being added, but we are also expecting the Fed to kind of brush aside that, or at least discount the impact of 2 hurricanes as well as the work stoppage at Boeing as being major factors in terms of less jobs being added to the economy. S&P futures at the moment holding pretty steady. We've got the Nasdaq up at just about 0.5% when it comes to futures trading at the moment. As I mentioned, Brent crude falling just over 4%. Switching it out to see how we're setting up in Asia. And as Shery mentioned, the political turmoil and uncertainty that continues to face Japan now in the wake of the weekend's election results, we are likely to see that softness when it comes to equities trading when Tokyo opens. Chicago and Nikkei futures already pointed off by about 1.4%. We're seeing that impact when it comes to dollar yen, the yen falling to the softest in about 3 months there as well. Australian stocks just creeping online at the moment. But let's get back to one of our top stories. And Israel striking military targets across Iran on Saturday following Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage 3 weeks ago. The assault was more restrained than expected, which could aid diplomatic efforts for a regional deal. Let's bring in Rudman, who's the professor at the University of Virginia. She previously served as a deputy assistant to the US President for National Security Affairs in the Clinton and Obama administrations. Mara, really great to have you with us. And of course, in one sense, the latest developments come at an interesting time as we're less than 2 weeks out from the US election. How do you expect this to play from here? Because, of course, we have just seen reprisals on each side for over the past few weeks and months.
Sure. Good to be with you to discuss this important topic. It remains a challenging time. We remain at something of an inflection point through the region. That said, the way in which Israel executed these strikes was both carefully calibrated, precise, and showed their extraordinary capabilities. I bring that up because it's important to recognize, to look at, you mentioned Iran's retaliation. Each of these countries and throughout the region, there's been the sense of that you only deter your adversary by not sitting silently when they take action against you. And so you end up with this escalating tit for tat. And I don't mean to use tit for tat to minimize the kind of action this was. But what Israel has done here is both in their precision taken out critical air defenses for Tehran, but did it and for Trump's leadership, and did it at a time and in a manner that minimized casualties that would occur. And they also took out the fuel mixers that were necessary for equipping the ballistic missiles that attacked them in both last month and previously. And so these are two key areas. So if Iran wants to act against Israel, it is more limited because they know a further Israeli strike would almost certainly go to their oil and their petrochemical refineries, and they do not have an air defense and cannot reconstitute one quickly enough to defend against that. So it hopefully will give us at least a window of time here as the region needs to recalibrate. The United States and others can work hard to try to move forward ceasefire arrangements for Gaza, get hostages back, get much needed humanitarian aid in, and start to put together and walk back what is happening in other parts of the region.
One of the catalysts for potential recalibration was the killing of Yahya Sinwar, right? A lot of people, including yourself, have suggested that this could be an off-ramp of sorts. Is that looking less likely at this point?
It's looking difficult. It's always been difficult when windows of opportunity, which is what I would say that his killing is, open up. They don't necessarily stay open for long. And the United States, the Qataris, the Egyptians are still dealing with a Hamas leadership that, opaque as it may be at this point, does not appear to be taking significantly different positions than Sinwar did. And that's to some extent to be expected because he was a strategic thinker, horrific as his actions were. And he likely left in place detailed plans, including plans for succession. And you also have in Bibi Netanyahu a leader who is often guided by the extremists in his own cabinet and coalition who are, in a sense, propping him up. I will note that in the way that he executed on the Iranian strikes, he separated himself from those two extremists in his cabinet who have been quite public in their unhappiness about it. It may signal that there's a little bit more room to continue to get Netanyahu to go in the direction that I strongly feel is in the best interest of his country as well as the region and the United States.
I was reading your op-ed about the importance of the next US president getting this right. Is there a counter-argument that the influence Washington has over the decisions being made by the current Israeli government, or at least by Benjamin Netanyahu, are becoming more limited?
I don't think so. And the reason I suggest that is because I think people both tend to have fairly short historical recollection and also historically overcount what the United States is able to do in any given situation, whether it's with Israel or any other country with which we're close, but is an independently run country. And so I think what we've seen, frankly, in this most recent situation with Israel and Iran is the strength of the United States' ability to provide strategic counsel. I think as with any close relationship on a personal level, you're usually most effective when you save your toughest words for private conversation as opposed to public. But I think some of those discussions, I think the back and forth had an impact, have helped in the calibration of this action. And it's part of the role of the United States and the right kind of United States leader to continue to operate in that way for U.S. safety and security, which is so interlinked with the safety and security and stability in so many other parts of the world.
Mara, how feasible do you think a two-state solution is, given the number of proxy conflicts that are on foot at the moment? And do you worry that the nature of this conflict to date is really serving to potentially, mobilize more generations here?
Yeah. Well, I know two things. One is that there is no one-state solution. And one-state realities are not feasible long-term. And I also know that for those who would suggest that a pathway to two states should not be continued, should not be launched, should not be built, should not be made possible, you are carrying out the strategic vision of Yahya Sinwar, who wanted very much for Israel not to exist, to rally world opinion against the existence of the state of Israel, and to launch, frankly, what would have been a very extremist Palestinian state, if it was to be recognized as such, that was not in itself representative of the Palestinian people around the world, let alone those who live in the West Bank and Gaza. And so finding a way forward for a Palestinian state that is safe and secure and lives next door to a safe and secure Israel is not a fantasy. It is very real, very possible.
Right.
There are people out there who can do it.
Mara, really appreciate your time with us today. Mara Rudman, who's a professor at the University of Virginia. Shery.
And Heidi, we continue to follow the political ramifications of the general election here in Japan. Of course, very consequential and a big question mark whether the prime minister will be able to continue and form a coalition. The last time that the LDP actually won the most votes but still wasn't able to form a coalition government was in 1993. So that would be historic. Let's get back to the latest on this setback for the prime minister and bring in our Japan economy and government reporter, Alistair Gale, who joins me now here in Tokyo, and of course very rainy and gloomy, so thanks a lot for coming out. Really perhaps reflective of what the LDP might be going through right now. Will the Prime Minister be able to hold on to his job?
Right, as you say, it's been a long night for the Prime Minister. It's going to feel particularly cold and wet for him this morning. So everything is up in the air at the moment. The LDP has fallen a long way short of the goal that Prime Minister Ishiba set of securing a majority with its coalition party Komeito. So now they have to try and form some kind of government, either working with one of the smaller opposition parties formally, bringing them into the coalition, or trying to find a way to work with them on individual policy issues. And the Prime Minister has said that he's willing to do that, but we'll find out hopefully today, how they're going to think about trying to form some kind of government.
What are the policies that could be most impacted?
Well, anybody who's being invited into the coalition is likely to have requests. There'll be policy things that some of these smaller parties will want. Specifically, the parties that are most likely to join the coalition want a cut in the sales tax, perhaps an increase in the tax-free allowance on income. So those will be the things that the LDP will have to think about, whether they can stomach those to bring these parties into the coalition.
At least when it comes to the different parties, it seems the biggest winner was the Constitutional Democratic Party. What does that mean for the future of Japan?
Well, yes, as you say, the Constitutional Democratic Party did extremely well. They are now the second largest, well, they are still the second largest party, but they have many more seats. And their leader has said that he actually wants to try and form a government with other opposition parties. That seems like an outside possibility right now. But at least what we do have is more of a two-party system here in Japan. The LDP has been so dominant. But with the CDP now gaining more seats, they will feel that they have momentum. They'll feel that they'll be able to impose, their requests more on the government, and Japan will be back to a sort of, perhaps a stronger opposition, and that will hold the LDP to account.
A weakened government, though, does mean that we might not see a clear path when it comes to the Japanese economy. We have the Bank of Japan policy decision on Thursday. How consequential could this be?
That's right. I mean, it's, all of these issues now have become very murky because what Ishiba has to do in the next 30 days is try and form a government, which means that, when it's things like policy issues, when his priority is doing things like raising the tax rates to pay for defence, that becomes a lot harder. And there may be people inside the ruling party who feel that they now have, the momentum. They may be able to kind of raise their voices on things like BOJ policy. So it does become harder for the BOJ, particularly if the markets are in turmoil, to think about when it could next raise interest rates.
Our Japan economy and government reporter Alistair Gale, thank you so much for coming out here in the rain as we dissect, of course, a parliamentary election right now and the results. And Haidi, we're already seeing that pressure on the Japanese yen, and we're watching for the market opens with the Nikkei already having lost ground last week.
And Shery, of course, we can get more on the Bloomberg for more on this. You can get that at TLIV Go to get commentary and analysis from our team of expert editors. We'll have much more on Japan's election results later on the Asia trade. We'll be hearing from the Asia Group what they think could be the next move for the LDP coalition. This is Bloomberg. Let's take a look at the week ahead now. The Bank of Japan's rate decision on Thursday is front and centre here in Asia. Economists expect the central bank to hold after Governor Kazuo Ueda signalled they still need to assess how the US economy is holding up before raising rates further. And on the topic of the US, we are getting third quarter GDP print on Wednesday as well as that October jobs data on Friday. Bloomberg Economics expecting it will show the first negative payroll print in about 4 years. And take a look at how treasuries are trading as we get this string of data points that's going to be key, both in terms of the PCE numbers as well as that end of the week jobs print. That unemployment rate expected to hold steady, but we are certainly expected to see both growth and the labour market to be affected by a couple of seasonal elements, including, of course, natural disasters and the work stoppages at Boeing as well. Let's bring in Diana Mousina, who's a Deputy Chief Economist at AMP, for a look at how all of this plays into expectations for the Fed and, of course, the kind of resounding theme that we've been dealing with when it comes to the US economy has been so much strength and momentum for the consumer. So to that end, do you think that PCE number is one that we need to look more closely at this week?
Well, the PCE number tends to move around a bit slower than the headline inflation figures, and I doubt that this week's figures will actually tell us anything new. Basically, inflation's moving in the right direction. The Fed can keep cutting rates, but probably at a softer pace than where we assumed a few months ago. We were always of the view that market pricing for the Fed went a bit too hard into the end of this year. The market was pricing in about 125 basis points at one point worth of cuts. We had the 50. I think it's likely that we'll see 2 more 25 basis point rate cuts. But the economic data is just holding up so strongly in the US that there is no need for the Fed to go harder right now. And especially at the time when bond yields are rising, which sort of threatens the outlook for equity markets, I think that will play into the mind of the Federal Reserve as well.
Is it difficult to sort of assign the significance when it comes to the jobs numbers on Friday, given we know there's a number of hurricane as well as labour strike-related factors at play there?
Absolutely. I think the volatility in the figures last month with the unemployment rate falling, and then with some of those natural disasters for this month's figures will really complicate the analysis. So if we take into account what some of the other labour market indicators are telling us, things like initial jobless claims, continuing jobless claims, some of the jobs leading indicators like job advertisements, job vacancies, I mean, they're still pointing to the labour market basically softening but not falling off the cliff. And that, I think, is really what's key. The unemployment rate doesn't look like it's going to keep surging like, it often does in periods where the US economy is going to slow. And that's likely for next year, that US economic growth is going to be softer. But it is hard to see the unemployment rate rising significantly above 5% in the US, or even really above 4.6% or so. So I think that the outlook for the labour market from the Federal Reserve's point of view is basically one where we see further weakening in employment growth, but we don't see a big increase to the unemployment rate, which is really good news for consumers and allows that normalisation of interest rates to go quite slowly rather than to see fast rate cuts. And I think that that's a good outcome for share markets as well, because if we got a big increase to the unemployment rate, that would really lead to concerns that the US is in a recession or at least potentially headed into one.
Governor Ueda has said that there's obviously clear focus, a careful focus on where the US economy heads as to the decision-making for the BOJ as well. I do wonder, with the kind of political uncertainty now, the failure to win that coalition majority, do you think that has an impact on monetary policy going forward, certainly on fiscal policy settings?
Yeah, in the short term, I think it will impact or limit the Bank of Japan's ability to potentially raise interest rates. I mean, it already looked like the Bank of Japan was hoping that they didn't need to raise rates as aggressively as potentially what we thought a few months ago. So I still think that the outlook for Japan is one where there is a normalization to interest rates, where the Bank of Japan does have to raise rates, but that process can probably occur a bit slower, because we know that a key concern for households in Japan has also been the cost of living, like it has in a lot of the Western world and a lot of the advanced economies. But at the current difficult point in their political cycle, it will be hard for the Bank of Japan to raise rates, because it will again lead to further concerns of cost of living issues. And also, if you look at the core inflation data for Japan, it doesn't really scream at you that the Bank of Japan needs to hike rates right now. Core inflation is still sub 2% in Japan. So it's not like the same situation that we dealt with in some of the advanced economies, where core inflation was running at 4% and above in annual terms. It is a lot slower in Japan.
And finally, Diana, of course, we're just under 2 weeks now from the US election, and it was interesting, we heard from the Vice Finance Minister of China over the weekend talking about how the dedication in terms of these new policies for stimulus to try and lift demand and lift the consumer. How much harder does that job get if we do see further tariffs and a very hawkish trade policy reenacted after that election?
Well, the difficulty is some of those trade policies that we may get if we get a Republican president, or even a red sweep, which will make it easier for those tariffs to be passed. We will not get any signs of what that looks like until next year, if Trump is actually re-elected. So in the short term, markets will worry about what that means, but I think that markets will probably focus more on the potential tax cuts that are likely to come under a red sweep or a Republican victory. And then that problem of tariffs will probably be something that markets focus on next year. And the same goes for the implications for China. It's hard to know what actually happens until we get concrete policies out of the Republicans. We don't know what percentage tariffs they'll actually impose, whether there'll be some deals that go with that. This trade issue will extend over multiple years.
Yeah. Diana, always great to chat with you. Diana Mousina, Deputy Chief Economist at AMP. More ahead on the Asia trade. This is Bloomberg. Take a look at oil stocks in particular. We are expecting some significant moves when it comes to energy names across Asia. We're seeing that reaction across Australian names, including Woodside, down by 1% there. That coming along with the dip in oil on the more limited nature of Israel's hit on Iran, the avoidance of striking those oil facilities over the weekend. This is Bloomberg. Take a look at how we're tracking. We're just about 30 minutes into the start of the cash trading session in Sydney. We are seeing a little bit of muted upside. That is being capped by weakness across energy and oil producers, as, of course, we continue to watch the reaction to the softness in crude on the sort of limited nature of the operations that we saw from Israel and Iran over the weekend. We're also watching the open ahead in Japan, likely to see quite a bit of downside pressure when it comes to Japanese risk assets. We're already seeing the yen falling to the weakest level in about 3 months. The ruling coalition failing to secure the majority in Parliament at the weekend election. Watching S&P futures there up by just about 0.5%. We're also seeing some gains when it comes to Nasdaq futures there as well, ahead of a big week of data going into next week's Fed decision. PCE in focus, as well as the jobs numbers as well, expected to see weakness, but of course being impacted by some temporary factors there. Let's get some analysis now with Garfield Reynolds, who leads our Markets Live Asia coverage. And Garf, let me start off with the reaction in the yen and this sort of compounds already the decline that we've seen of about 7% over the past month for the yen against the dollar. At this point, we would usually be thinking about intervention, but what does the disarray when it comes to the political situation and the government mean for the prospect of intervention?
Yeah, well, it makes it a lot harder for them to intervene, you would think, because they're not actually totally sure who's going to remain in government. That's all very much in flux. So that could lead to some policy paralysis, perhaps. Then again, you can see the way that the yen it gapped lower at the start of the day today, but then it's come off that. So perhaps there's, at the very least, some concern about jawboning, or even some concern that, given the difficult political situation, there might be a willingness to move to intervene while they can, as it were. For the moment, you've got what's maybe something of a caretaker situation. It's all very much in flux. So you have the yen falling, as you said, to the lowest since July at the open. Came back a bit. When you look at the political situation, the likelihood that pushes the BOJ to stay away from rate hikes for the foreseeable future, plus higher Treasury yields, you would argue the yen has a lot further to go to the downside, dollar yen upside, than it's so far managed to eke out.
There's a couple of sort of threads there. One is I wanted to ask if you do think that this political instability or uncertainty at least does cloud the normalisation path for the Bank of Japan. And the second part is there still the opportunity for the yen to perform as a haven, given we are, just days out from the election? Yeah, well, the normalisation bit first. The BOJ... there isn't a really strong, independence tradition when it comes to the BOJ. You think of Kuroda's massive QE was very much part of Abe's three arrows, and that continued the tradition where the two are seen acting, the government and the central bank are seen acting far more in concert than is the case for the Fed, let alone the ECB or even the BOE. So there's that does, at the very least have traders in Japan and elsewhere doubling down on expectations that the BOJ's path will be even more gradual than it would otherwise be. When it comes to the other part of the outlook, the idea of the yen as a haven, that is interesting. We had some chatter last week that currency traders were looking for the yen as a potential haven going into the US election once the Japanese election was out of the way. Now, as things now stand, I'm not sure the Japanese election is out of the way as an issue, so that's going to make it harder, when it comes to the yen as a haven. At the moment, the dollar looks like the haven, as it were. I suppose if you get a Harris victory and a very strong showing for the Democrats in the lower house of Congress, that would probably be a dollar negative, but I'm not sure how strong a dollar negative would be given everything that's going on. So a higher dollar looks like the mostly outcome in almost any scenario, unless you get the economic situation turning around. If we got very weak payrolls, we had a resumption of bets on rapid Fed easing, that would bring the dollar down. The payrolls will be a difficult one, given we know that there's two hurricanes and the Boeing situation that's going to be feeding into that number. Yeah, though, one of the advantages, as it were, of trading US dollar, US treasuries and economic events for the US is precisely that there's so much information about the forecasts, about the expectations, what people are looking for. So even if you get what looks like a weak number, if it's not as weak as expected, then you'll get that response, where Fed bets on slower Fed easing will remain, and if you get a real downside surprise compared to the expectations, then you will get movement
in the Fed bet. So it's more about adjusting your sights, as it were, going into the data, but there's still the potential for very strong reactions on either side.
Gafu Reynolds there, who leads our Markets Live Asia coverage. It is a busy week and really heaving with political uncertainty as well. And that's really the theme that characterises Japanese markets set to open at the top of the next hour. And we are looking like a session that is fraught with quite a bit of uncertainty, really reflecting what we're seeing with the government now in disarray, that sort of potential political vacuum that has been established, clouding the path ahead for the Bank of Japan, giving really yen bears a green light to continue charging ahead. We're seeing dollar yen at that 152, so sub 153 level. But as Garford was just talking about earlier, at this point we might be thinking about intervention, but that may be difficult to have direct intervention when we don't quite know what's going on with the government either. Japanese equities also likely to come into quite a bit of pressure as we head into the start of trading in Tokyo. And that is the context, Shery, in terms of what the market is seeing. So quite a bit of chaos as we try and work out what the next steps are for the ruling coalition.
We'll get more details about what could happen next when Prime Minister Shigeru Ishiba speaks at 2 p.m. local time. But the scenarios right now are pretty diverse. I mean, will he try to get another smaller party to join the ruling coalition and be able to form a government? Will the LDP and Komeito rule as a minority government with some compromise when it comes to specific issues? A big question surrounding what happens to Shigeru Ishiba's policies going forward, or if he'll be able to stay on as Prime Minister. Of course, already since the LDP presidential election just in September, we saw the Nikkei falling about 5%. The Japanese yen also losing about 5% against the U.S. dollar. So we have seen significant pressure already, Haidi, as you noted, and we are expecting more pressure to come as we see the market opening at the top of the hour.
And you can also turn to your Bloomberg for more on this. Of course, TLI Vigo to get commentary and analysis from Bloomberg's expert editors as we continue to watch the situation in Japan. As Shery mentioned, we will be getting some more details in the meantime, really watching the yen very closely. This is a currency, remember, that even going into this weekend's election, uncertainty has slumped 7% against the dollar of the past month. It's erased more than half of the gains made from that July to September period. We're really asking the question as to at what point we see that sort of 160 level as being in focus and what the government, if anything, will be done about it. We do have just some breaking news crossing the Bloomberg when it comes to one Japanese company that is in focus, and that is we're watching some of these developments when it comes to Olympus in terms of their leadership. Olympus saying that their CEO, Stephen Kaufman, has resigned on drug allegations, he has resigned on an illegal drug allegation there. The resignation is effective today. And in the meantime, Yasuo Takeuchi will be carrying out the CEO duties for the time being. What we are hearing in terms of the announcement from Olympus is that upon receiving an allegation that Mr. Stephen Kaufman had purchased illegal drugs, Olympus, in consultation with outside legal counsel, immediately investigated the facts, and this was the decision that was made based on the results of that investigation. We're hearing that Stephen Kaufman has resigned his position as CEO effective today. Let's take a look at some of the latest geopolitical stories we're following. And China has filed a diplomatic complaint with the US and says it reserves the right to retaliate following Washington's latest weapons sales to Taiwan. The US has approved of some $2 billion of military sales to the island. Tensions in the Taiwan Strait are elevated after China held military drills around Taiwan earlier this month. Queensland has become Australia's first mainland state to elect a centre-right government in more than 18 months. It is a shift away from the Labor Party's hold on power ahead of national elections that are due by May. Local media predict the Liberal National Party, led by the Premier-elect David Crisafulli, could win a majority in the state parliament. Labor had been there in office since 2015. Thailand is reportedly planning to raise the retirement age to 65. The Bangkok Post quoted the country's Labour Minister as saying the government wants to increase contributions into the nation's social security fund to extend benefits to 2 million migrant workers. The retirement age in Thailand for government officials and employees is currently 60. Much more ahead on the Asia trade. This is Bloomberg. We do have some breaking news when it comes to Boeing, with advisors said to be lining up investors for fundraising. That fundraise is said to likely include equity as well as convertibles. They're planning to launch this capital hike as early as tomorrow. That's according to people familiar with the matter. This is an offering that would help the beleaguered plane maker boost its liquidity. They're set to raise more than $15 billion from the capital hike, according to one of the people Bloomberg spoke to, adding that the amount could still rise depending on demand. Their advisors have been lining up those potential investors for the fundraising. According to those sources who asked not to be identified, that information isn't public. The company received US SEC clearance to raise up to $25 billion, and we are seeing Boeing just seeking to prevent that credit rating downgrade to junk. Deliberations are still ongoing. We know that the details of that offering, including things like timing, could still change, but we're continuing to watch Boeing as, of course, a number of issues continue to circle its business. Well, Japanese markets is another one that we're watching very closely at the top of the next hour. We're just over 15 minutes away from the start of trading there. We're expecting quite a degree of pressure to come down when it comes to Japanese risk assets there. Take a look at dollar yen. We're hovering at that 152.80 level there. We did see that sustained weakness really just being compounded after the disarray that we see in the political situation. Japan's ruling coalition failing to win a majority in parliament at the weekend's election, tumbling as much as about 6% and then going a little bit further. Instability really looming after what was seen as a gamble taken by Prime Minister Ishida to call that snap election. And Shery, let's get some more analysis on this, a pretty quickly moving situation as we continue to watch for what the next steps are going to be.
And joining me here in the rain outside of the National Diet is Naomi Fink, Chief Global Strategist at Nikko Asset Management. Naomi, thank you so much for coming out today, because we're really trying to gauge the impact on the markets when the Nikkei, the topics, opens at the top of the hour. But already we're seeing the Japanese yen under pressure. What are your expectations of how the session will go?
Yes, thanks very much. I think that this probably does look like maybe a larger than expected loss for the LDP when we look at the markets. But I think that the short-term moves in the markets may not last, even if we do see some pressure on stocks. Of course, at least short-term traders are probably going to make short-term moves. But there are plenty of longer-term investors wanting to capitalize on those volatile moves and buy on the dips. And the earnings are there. The valuation doesn't look too stretched. And the economy is turning toward more domestic demand growth.
I do wonder what happens if Prime Minister Ishida actually resigns. We are getting his press conference at 2 p.m. Barclays was saying we could see a 2% spike on the yen on risk-off moves.
Well, I mean, if we do see risk off, it probably has to be a little bit more globalized than just the yen, because, of course, with currencies, you have at least two currencies at play. And the yen doesn't yield as much as the dollar. And that's kind of a fact. And so it would... I would find it hard to see that move really last, even if it does happen.
If we continue to see a weakening of the Japanese yen, which is already the worst G10 performer this year, what does that mean for the markets, especially for equities exporters that are reliant on selling products overseas?
Well, I mean, if we see weakening in the yen, of course, for the exporters, it's really positive. But I think counterbalancing that, we do have a Bank of Japan meeting coming up. I don't really expect them to do anything right now, but we have had quite a lot of price hikes in food and beverage, for example. That's hitting households. So the BOJ can't totally back off from its tightening regime. It may avoid volatility, as we have heard them say this, but I think that if we do see any weakening in the yen, the BOJ gets more vigilant and perhaps more, all else equal, bias to eventually hike.
Do you see a virtuous cycle finally setting in here in Japan with inflationary pressures being sustainable?
Now, I do see some signals of a virtuous circle, but it's not something that's created overnight. I mean, we are seeing things like wage rises. In some months, we've seen real wage rises. We've seen some positive signals for next year's shunto. We have seen domestic demand start to pick up, but it's not just one and done. It's a process that has to continue. So I think we have a lot of the pieces in place, and it will take time. And so long as we don't have some sort of market collapse, which I don't foresee, then I think the process will continue.
What do you expect from the Bank of Japan this week?
Well, I think the Bank of Japan is going to give us some messaging, and that messaging probably is that it remains on its hiking path. The Bank of Japan has, over this whole regime, pledged to remain behind the curve, and that's consistent with allowing prices to pick up first and then acting. Prices are picking up, so I would imagine that they're not going to abandon their hike regime.
Does a weakened government, less than clear mandate for Prime Minister Shigeru Ishiba affect that calculation for the BOJ?
Well, I think the BOJ will avoid short-term volatility, but that's probably it. I mean, one of the beauties of having an autonomous central bank is that they respond to inflation and growth. So if inflation expectations suddenly start falling through, okay, they'll rethink. But I don't think that the Bank of Japan is going to change everything just because of the political developments. I think they will look through this and take a look at what's going on with inflation and growth.
When do you expect the next rate hike to come from the Bank of Japan, and what could that mean for the yen and stock markets?
Well, I mean, we have seen some price hikes this month even. If we actually see those come through a bit stronger in November, it's possible we might have a hike before the end of the year. Of course, we also have the U.S. elections, and if we have volatility around that, that can also affect the BOJ's calculation.
As you said, I mean, in order for the yen to move, you have the U.S. dollar on the other side, and we continue to see strength there.
Well, I think that this is... If we take a look at the Japanese elections versus the U.S. elections, probably markets are kind of gearing more for volatility around the U.S. elections rather than the Japanese elections. Maybe that's why it was more of a surprise that we had an unexpected outcome. But we still have that ahead of us. So I think that, we can't really make any foregone conclusions before some of these big events are over.
Naomi, Fink, great to have you with us, and you're sticking around because we are bringing you back for the market opens of Nikko Asset Management here outside of the National Diet. And of course, we're talking about the Japan-U.S. relationship when it comes to the economy. Well, Japan's long-standing alliance with the U.S. has also played a crucial role under the Biden administration. This as Washington seeks to counter China's growing influence. We take a look at the issues facing the relationship as Washington prepares for a leadership transition as well. Japan's Prime Minister Shigeru Ishiba is a self-declared defense nerd who's advocated for stronger ties with Washington. The question is what that relationship could look like. Ishiba has not only called for a more equal security partnership with Washington, at one point he even wanted a NATO-like alliance in Asia to deter China and North Korea. Whether he'll be working with Vice President Kamala Harris or former President Donald Trump, Ishiba's government faces a difficult balancing act as the U.S. seeks alignment on tech export restrictions to China. Japanese firms, including Tokyo Electron, play a key role in the chip supply chain and are heavily reliant on orders from China. Beijing has threatened retaliation if Tokyo further restricts the sale of chip-making tools, and those actions could affect crucial materials for exporters like Japan's auto giants. That leaves Japan caught between its two biggest trading partners. A Trump win might mean more tariffs on Japan's own exports to the U.S.
You have to pay for your cars. You're sending millions of cars. You don't accept a car from us.
Bloomberg Economics estimates a sizable shock to Japan's U.S.-bound exports if Trump wins and goes ahead with his tariff plan. Another potential stress test may be Nippon Steel's $14.1 billion bid for American industrial icon U.S. Steel. The takeover has become an election flashpoint, and both Trump and Harris say they'll block it.
I would stop it if it hasn't been completed by the time I'm president.
U.S. Steel should remain American-owned and American-operated.
Still, Washington insists the Japan-U.S. alliance will remain intact, even as both countries' new leaders may need to recalculate ties.
Japan's relationship with the United States is bigger, deeper than one financial or business transaction.
You can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. That's at 7:40 p.m. on Sunday in New York. And subscribers can always watch live on the terminal as well using the TV Go function. We have much more ahead on the Asia Trade. This is Bloomberg. latest when it comes to corporate headlines that we're following. The Wall Street Journal is reporting that Boeing is considering the sale of its NASA business. Sources say this includes a Starliner space vehicle and operations that support the International Space Station. Boeing is facing a deepening financial crisis, with its largest labour union extending a strike impacting most of its airplane production. Meanwhile, its space and defence projects are struggling with delays and cost overruns. Google plans to preview AI technology that will take over a web browser to complete tasks such as research and shopping. This is according to tech publication The Information. Google was reportedly set to demonstrate the product as soon as December with the release of its next Gemini large language model, the publication says. Codenamed Project Jarvis, the project intends to target users who want to automate everyday web-based tasks. TSMC founder Morris Chang warns that the chip giant will soon face its most severe challenges in driving growth amid trade tensions. The go-to chip maker for Apple and Nvidia has been restricted by the US from making advanced AI semiconductors for Chinese customers. Despite this, Chang says TSMC has a strong team that will ensure its success. Well, we are just a few minutes away from the start of trading opening in Japan, and it does look like a session fraught with risks and uncertainty. This as we continue to process the political gyrations over the weekend, that reaction to Japan's coalition losing its majority and looking to see what the next steps are next while it tries to secure that coalition, as the opposition will also be looking for allies with the aim of taking that leadership. So all of that uncertainty playing into the Bank of Japan decision there as well, that weakness in the yen and some downward pressure when it comes to Japanese stocks at the open there. The market opens in Tokyo and Seoul are next. This is Bloomberg. The Asia trade, we're counting down to Asia's major market opens, and a lot for investors to be contending with this Monday morning here in Asia. Shery, of course, political chaos is what you're focused on. We're also counting down to the US election as well. We're also seeing geopolitics there weighing when it comes to crude markets and energy assets, but it really is that uncertainty when it comes to what next for the Japanese government.
I'm outside of the national diet right now after Japan's ruling coalition just lost its majority, especially the Japanese local media now reporting that the LDP and ruling Komeito have actually fallen short of the 233 seats needed in order to be able to continue ruling. So the big question right now, Haidi, is whether Prime Minister Shigeru Ishiba will be able to form a government. And of course, all of that will play into the markets.
And they're scrambling to try and form that coalition, Shery. It's not just going to be the LDP, but of course, some of those opposition parties will also be trying to form their allies, and some of that horse trading we'll be watching as we get into the hours and days to come. But take a look at already the impact that we're seeing across Japanese risk assets, right? The yen had already been under pressure over the past month, about 7%. And all of this political uncertainty is certainly continuing to weigh on it further. The irony is, of course, at these levels, we would sometimes perhaps talk about the likelihood of intervention, but the government sort of uncertainty at this point really makes intervention also a difficult challenge as well. If you take a look at the start of cash trading on the Nikkei 225, we knew there was going to be a bit of downside, about 0.4%. We are watching Olympus as well. We had an announcement in terms of that leadership change there. We're continuing to wait on more details. The topic's also looking a little bit softer. Dollar yen, we're just sort of bouncing around that 152, 153 level there as well. That question of the day for our MLive blog is how soon until we get to 160. Also, the element of the US election in the coming days as well. Does the yen then kind of bounce back when it comes to acting as a haven, and how does what we're seeing when it comes to global bonds at the moment play into that as well? It does look like Japanese ones are sort of embracing that sense of a geopolitical and political uncertainty at this point. Switch out to take a look at Korean stocks that we're watching at the moment. We are seeing the cost be coming online, a little bit of upside there. The KOSDAQ index, some of those chip names extending gains a little bit more. We have been watching, of course, just the resounding strength that we've seen in the US dollar and the impact, particularly when it comes to emerging Asia currencies. And of course, the US focus will also be front and centre this week when it comes to third quarter, that first reading of GDP. We're also seeing that PCE index being in focus as well, particularly when it comes to how that consumer is going to react, as well as Friday's jobs numbers. We're expecting to see some sort of seasonality as well as hurricane-related and Boeing-related factors at play there as well. So taking a look at what we're seeing, we're an hour or so into the start of trading here in Australia, and is actually kind of one of the outperformers, although I should say we are seeing the broad broad market now just pulling back and reversing some of those earlier gains. We are seeing, though, miners and tech seeing a little bit of leadership there. That's what treasuries are doing at the moment as we head into, of course, the week before the Fed and some of those implications when it comes to the data. And, of course, Shery, we're also watching Brent and energy prices given the situation in the Middle East and those developments over the weekend.
And Heidi, of course, we're watching Japanese markets right now as we see the downside pressure for the Japanese yen and Japanese stocks as well. Let's get Naomi Fink, Chief Global Strategist at Nikko Asset Management, to digest today's moves and really marginal downside right now. How much of this was already priced in?
Well, I think to some extent the market did expect that there was going to be some shift. I think that the market probably didn't price in exactly what happened, which was a larger loss than expected, I would say, for the LDP. I'm not really sure that the market is going to have a lot of momentum on the downside, because even if we do have lack of clear policy going forward, a lot of the policy pieces that really need to be in place for Japan to continue its virtuous circle of wages and prices are already in place. And if we take a look at the stock markets, they're not particularly overvalued. They're right in the middle of their 20-year range. And that's unlike, for example, U.S. stocks. So I don't see any type of volatility lasting for that long.
In fact, we're now seeing the Nikkei reversing some of those earlier losses at the moment and actually turning green. So what does a longer-term outlook look like for Japanese stocks at this point?
So I think we still have pretty good conditions worldwide. There's no kind of market shock right now on risk assets, and so long as this keeps up, then the process is happening very slowly. The rotation to domestic demand, recovery in Japanese wages, and ability of the consumer to really expect growth in the future is still in play. So that's the virtuous circle, and so I would also anticipate that the BOJ gradually continues withdrawing stimulus.
Let's talk a little bit about the BOJ. That decision coming out on Thursday, will that make a meaningful difference to investors?
So I don't anticipate the BOJ to really move rates at this stage, but we have had quite a few hikes in food and beverage prices this month. So we'll see that data come out in November. And if the data do show that the fight against inflation has stalled, yes, I expect the BOJ to signal a move. So I don't see anything different right now that should reverse the BOJ's hike cycle.
Could the difference be not reversing the BOJ's hiking cycle, but could the difference be on the pace of the moves towards tightening, the fact that the yen continues to weaken? I mean, we're seeing stocks turning positive, but the yen is still near that 153 level.
So trend weakening in the yen does feed in with a lag to import prices, which feed into consumer prices. So all else equal, a weaker yen is probably an argument for price hikes. And the BOJ, given it's still autonomous, probably will respond, eventually with a lag to price hikes and growth.
Naomi, I guess a bigger picture question when it comes to the political uncertainty. We've had perhaps an unusual period of political stability for Japan, right? We know that the leadership is not likely to replicate the kind of, personality leader that we saw with Shinzo Abe. Do you think that there is a risk now developing that we're in for that sort of sustained period of rotating door leadership again?
Well, I wouldn't be so quick as to say that we have a rotating door leadership coming up. I think the coalition forming process probably will take a little bit of time. But at the same time, I don't necessarily think that Abenomics is the right policy for today. It may have arguably been the right policy when 2% inflation was a pipe dream. And then the BOJ really did have to start invigorating those inflation expectations. We're not there anymore. So we need a different mix of policy, and we need the Bank of Japan to maintain its autonomy, which it still has. So I think, although, of course, forming a government is important, it's not the only question that we have facing the Japanese economy, which is in a very, very different place than at the start of Abenomics.
And some of the other questions come arguably from outside Japan, right? We know that Governor Ueda has said that they need to watch what the Fed does and how the US economy performs. Do we also need to watch for the implications of the US election, what it means for China and how that also passes through to economies like Japan?
Well, arguably, perhaps the Fed has a tougher job than the Bank of Japan right now, because the Bank of Japan has committed to hiking, but at a very, very slow pace. However, the Fed is potentially at a crossroads. It's signaled some cuts. It's had some stronger data, and it too has to balance inflation and growth. And inflation is not something it can affect today. It affects it through monetary policy, through inflation expectations. So insofar as the elections in the U.S. affect inflation expectations, the Fed may have to act differently than is priced in now.
Not to mention inflation, of course, very much affected by what happens to oil prices. We're seeing escalation tensions in the Middle East, Israel just retaliating against Iran. How should we be factoring that in?
Well, I think we've been lucky so far in terms of oil prices, probably not in terms of the violence, of course, but the oil prices have remained remarkably low given the escalating violence. However, that might not always be the case. And if we do get a pop higher in oil prices, that is likely to be inflationary all round.
Naomi, Fink, good to have you with us. Thank you so much for coming out here. A gloomy, rainy day here in Tokyo. Nikko Asset Management Chief Global Strategist. Of course, we continue to watch the market moves. We're expecting Prime Minister Shigeru Ishiba to give a presser. And then this afternoon, we're going to get more details about what the future of Japan's politics could look like, Haidi.
Shery there in front of the Diet building as we continue to try and get answers to lots of these questions, left really up in the air after the election outcome. Let's take a look at one of the stocks that we're watching, one of the companies that we're watching very closely in Japan in the early part of the session, Olympus, falling already by just about 4% after the CEO resigned, after the company conducted an investigation into an allegation that he bought illegal drugs, finding behaviours that were inconsistent with company policy. Stefan Kaufmann resigning all positions after that probe. The company has appointed an executive chairperson to act as the interim CEO. Yasuo Takuichi is that person who will be taking on the chief executive role in the interim. We did also see Olympus back in August cutting that full-year operating income forecast. The company has really struggled with inconsistent growth over the past few years as it goes from cameras and imaging gears to that pivot to medical equipment, and now this leadership change that has been announced. We will stay with Japan with more on those election results. We'll be hearing the views of Asia Group and what they think about the next move, what that could be for the LDP coalition. This is Bloomberg. Take a look at what we're seeing when it comes to Japanese assets. So some of that pressure appears to have abated a little bit, at least when it comes to the equity part of the session. Of course, some of the uncertainty as we continue to process what the impact will be of the ruling LDP failing to gain that coalition for the first, failing to gain that majority, I should say, for the first time since 2009. We're seeing that pass through when it comes to dollar yen, of course, but also watching for a pretty muted reaction there across Japanese equity assets. Shery.
Haidi, as we continue to watch Prime Minister Shigeru Ishiba try to raise and form a coalition, let's bring in our next guest who expects internal pressure to intensify for Ishiba to step down. With us now is Rintaro Nishimura, Japan Practice Associate at the Asia Group. Rintaro, great to have you with us here outside of the National Diet as we continue to watch these wranglings inside by lawmakers. Will the Prime Minister lose his job?
That is one scenario that might play out. I mean, I think there's a couple of scenarios that still might play out. There's not going to be immediate pressure to get rid of him now because there's a lot of internal, instability still, and so, trying to get replace the prime minister at this moment is not the first thing that the LDP would think for, because they would first have to get to the 233 majority line first, which means the priority now will be finding alternative partners to work with before, thinking about whether they would have to replace Ishiba.
What are those alternative scenarios?
Right now, the alternative scenario is getting to the majority line with either the Democratic Party for the People, which is headed by Yuichiro Tamaki, or the Ishin Party, which is headed by Baba Nobuyuki. Those two parties are more aligned on economic policy and also have expressed reluctance to working with the CDP in the past. And so there's still an opening for the LDP and Komeito to kind of negotiate a way for those two parties to either come into the coalition or at least come to sort of agreement to work together on policy.
What are some of the issues that the Prime Minister may need to give in on?
It seems that both the Ishin Party and the DPFP want to cut consumption tax, which is something that the LDP did not campaign on. So that would be one thing that I assume both parties would want from the LDP if they were to join a coalition. The Ishin Party also wants something akin to a universal basic income, which also something that the LDP and Komeito did not campaign on. The DPFP also wants to increase public spending on things like education. So there's a couple of things that the LDP might have to compromise on.
We do have a budget that needs to be formed by the end of the year.
Mm-hmm.
What are we expecting to see there?
I think the priority for all parties, I think, will be to try and form that supplementary budget by the end of the year, and then going into next year, finalizing next year's budget by April. And so I think there will be compromises made to make sure that the budget is formed.
There's really strong resentment when it comes to the LDP and the slush fund scandal with members enriching themselves and those revelations last year. What will the ruling party need to do in order to change its image?
I think the first thing would be to re-amend the Political Funds Control Act, which has a lot of loopholes on different kinds of funding that exist for lawmakers. That's something that the DPFP and Ishin have also advocated for. Also, their junior coalition partner Komeito had also been asking for more transparency and more tightening of the loopholes, but the LDP couldn't commit to that. Given some of the internal interactions with the people who were involved in the scandal and those who weren't. And so I think that's an area that the LDP would have to give in on to show that they're serious about change.
The biggest winner from this election seems to have been the opposition Constitutional Democratic Party. How will they play a role in the new government and policies?
Oh, well, obviously they are now within reach also of a majority if they can work out a different coalition. So they now have power to really play a force in trying to negotiate policy within the Diet space. So that gives them more power than they had in the past. And at the same time, I think that the ability to kind of form a coalition is now hanging between the two, the ruling party and the opposition party. So now the parties in the middle, the DPFP and Ishin, now have considerable bargaining power to kind of see what the LDP or the CDP can give them in a hypothetical coalition.
The Bank of Japan, of course, is an independent body, but does this have implications for the BOJ's normalization path?
I think that the parties do agree that the BOJ's rate hike would have to happen at some point, but I think there's a question about at what point that happens. And at this moment now, given the political instability and, there's questions about what kind of coalition comes together, I think for at least this month's policy meeting, I don't think the rate hike is realistic to expect.
There was a lot of optimism about Japanese markets from foreign investors looking at the reforms in the way that the companies are being managed these days, changes, reforms. Will what's happening in the political scene have a meaningful impact on some of the market reforms that we've seen here?
I think the opposition parties are at least more keen on, changing the way that, the economy is run. The LDP and Komeito have kept power for a very long time, and there was no real incentive because of the power that they held in politics to really instigate, big changes. But now that they're in a weaker position and they need to listen to these other parties, I think there is momentum, or at least an opening now for changes to happen.
Just quickly, what about the relationship with the United States?
I think the United States is not going to like that there's instability, obviously, but I think for the most part, foreign policy and security won't change, regardless of whether it's a LDP-led government or a CDP government. One, I think, concern that the U.S. might have is that the DPFP and Ishin, and also the LDP under Ishiba, have all been talking about possibly revisiting the U.S. Status of Forces Agreement, which that's not something that the U.S. government has really wanted to explore, at least based on initial comments that were made by the White House and the State Department. So that's something that could be a problem for bilateral relations going forward.
Rintaro Nishimura, good to have you with us. Thank you so much for coming out here at the National Diet, the Asia Group Associate Practice of Japan. But of course, Haidi, we continue to watch what's happening in the U.S. elections because, as we've heard throughout the day, that might even be more consequential for Japanese assets.
We are just days away from that key vote now, aren't we, Shery? And of course, you can get more on your Bloomberg for this top story. You can get to TLIVGU to get that commentary and analysis from our team of expert editors. The other top story we're watching is, of course, a reaction in energy markets, given that those Israeli strikes on Iran over the weekend avoided the crude facilities of that OPEC member, and that has given a little less of reason for oil prices to be sustained much higher, as we see Brent crude still down about 4%. New York crude also softer by 4.25%. We see hedge funds bullish bets on oil, on US oil that is, being slashed by the most in 14 years. So that attack being more restrained than many had been expected. We do know that, we have heard from Iran that an appropriate response may also be levelled there as well. But that strike avoiding oil, nuclear and civilian infrastructure sites. So that attack on Iranian military targets happened early on Saturday, was coordinated with Washington, and as I mentioned, was perhaps more restrained than many had been expected. Does this help diplomatic efforts for ceasefire negotiations in the region? Let's bring in Bloomberg's Michael Heath. And we do know that these talks, certainly when it comes to a ceasefire on the Gaza Strip, will be picked up. But if we take a step back, the targets that were targeted, as it were, what was the rationale here, and did we see major infrastructure damage at all?
Yeah, Heidi. Basically, what Israel's done is it's hit Iran as hard as possible without, as you mentioned, touching the energy assets or its nuclear or its research work there. But it's basically taken out Iran's air defences, which sort of leaves it exposed from the air. It's hit missile warehouses and production facilities, and also a fuel production area as well, which is likely to at least delay, or whether it's knocked it out or damaged it, it's likely to delay production of missiles. So Israel can sort of argue that it's put it sort of slowed the process of Iran being able to manufacture these missiles that they attacked Israel with about 3 weeks ago. So it was a significant response, but it was also a restrained one. And as Bloomberg's also been reporting, the hit to the air defences, it sort of leaves the door open after the US presidential campaign for potentially another strike, because what's left open there is economic assets and including oil that really could do some severe damage to Iran's economy there.
At the same time, the CIA Director William Burns is in Qatar with the Mossad Chief David Barnea, so leading that Israeli delegation for these new talks over a Gaza ceasefire with Hamas. What do we know about the nature of these talks?
Well, Haidi, the Egyptian president came out with some comments on Sunday saying he was suggesting a sort of confidence-building measures that would see four hostages, Israeli hostages released for some Palestinian prisoners, and then 10 days of talks to try and secure something more substantial in terms of a ceasefire and something longer term. Now, that doesn't seem like it's going to fly. Israel has suggested that it will provide safe passage for Hamas's the remaining leadership and fighters, that they could go into exile in a third country. Hamas has obviously rejected that. It doesn't want to leave the equation. So it's sort of hard to see how we go forward here. But given where things stand, I mean, Israel has obviously it's killed the leader of Hamas, it's killed the leader of Hezbollah. It has responded to Iran, and for all what Iran has said, it's unlikely to respond at this stage to what Israel's done. It sort of played down the significance of Israel's attack. There is the door open there that Israel sort of met its targets to do something, but as we know, there's been no progress for months on this, and it's hard to see why it would come just now.
President Biden and Secretary Blinken would love, some sort of result, a diplomatic victory just, 8 days out from the election.
Yeah, I mean, and as I'm sort of saying, that the stage is set there for a movement to some sort of political side of this. I mean, Israel has completely demonstrated its intelligence and military mastery here, and it really has Iran on the back foot, and it certainly has Hamas and Hezbollah on the back foot, and it's reinforced that credibility of the Israeli military that was damaged so badly in the October 7th attacks. So the scene is set where that they could produce something, a political solution, but there's just no evidence from the Israeli side that they want to do that. And Israel would argue too that they need someone that they can trust running Gaza and Lebanon having a government that can control things too. So there's just Israel's sort of argument is who's on the other side and can we rely on them for security? But also you have Israel with a very right-wing government that wants to pursue the military option to its finish, and they're just not talking political solutions at the moment. So it'd be a real surprise if we get something before the US election.
Bloomberg's Michael Heath there with the latest. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at some of the latest geopolitical headlines that we're following. And China has filed a diplomatic complaint with the US and says it reserves the right to retaliate following Washington's latest weapons sales to Taiwan. The US has approved of some $2 billion of military sales to the island. Tensions in the Taiwan Strait are elevated after China held military drills around Taiwan earlier this month. Queensland has become Australia's first mainland state to elect a centre-right government in more than 18 months. It is a shift away from the Labor Party's hold on power ahead of national elections due by May. Local media predict the Liberal National Party, led by the Premier-elect David Crisafulli, could win a majority in the state parliament. Labor had been in office there since 2015. Thailand is reportedly planning to raise the retirement age to 65, with the Bangkok Post reporting that the country's Labour minister is saying the government wants to increase contributions into the nation's social security fund to extend benefits to 2 million migrant workers. The retirement age in Thailand for government officials and employees is currently 60. More ahead on the Asia trade. This is Bloomberg. Well, of course, we are just, about 8 days out from the US election day, and we are seeing both candidates really neck and neck and trying to reach out in these last days to key parts of the demographic. We're watching at the moment a rally for Donald Trump in Madison Square Garden at the moment in New York, and we actually heard from Elon Musk. They're claiming that he can cut at least $2 trillion from the federal budget. Really laid out his vision for substantial government spending cuts if Donald Trump wins the presidency. Trump has, of course, said that he'd appoint Musk to federal cost-cutting roles within his, potential new government there, and that is nearly a third of existing spending, if you take a look at those calculations. So you're seeing former President Trump there speaking at the moment. He has spoken, of course, at length about cutting the federal debt, but without detailed specific programs on what he would potentially curb there. But, of course, elections are the theme at the moment, isn't it, Shery, as we continue to watch for the reaction after what we saw over the weekend in Japan?
And what's really interesting is that the U.S. elections could actually have a bigger impact on Japanese assets when it comes to what we're seeing with the weakness of the Japanese yen, right? And given the uncertainty that we got over the weekend elections in Parliament, I'm outside of the national diet right now. What really Japan's alliance with the United States will look like is really going to be in focus, especially as we have no idea right now who could be leading Japan in the next few days. And this alliance has been so important for the Biden administration, right? Washington seeking to counter China's growing influence. We take a look at the issues facing the relationship as Washington, of course, prepares for that leadership transition.
Japan's Prime Minister Shigeru Ishiba is a self-declared defense nerd who's advocated for stronger ties with Washington. The question is what that relationship could look like.
Ishiba has not only called for a more equal security partnership with Washington, at one point he even wanted a NATO-like alliance in Asia to deter China and North Korea.
Whether he'll be working with Vice President Kamala Harris or former President Donald Trump, Ishiba's government faces a difficult balancing act as the U.S. seeks alignment on tech export restrictions to China. Japanese firms, including Tokyo Electron, play a key role in the chip supply chain and are heavily reliant on orders from China. Beijing has threatened retaliation if Tokyo further restricts the sale of chip-making tools, and those actions could affect crucial materials for exporters like Japan's auto giants. That leaves Japan caught between its two biggest trading partners. A Trump win might mean more tariffs on Japan's own exports to the U.S.
You have to pay for your cars. You're sending millions of cars. You don't accept a car from us.
Bloomberg Economics estimates a sizable shock to Japan's U.S.-bound exports if Trump wins and goes ahead with his tariff plan. Another potential stress test may be Nippon Steel's $14.1 billion bid for American industrial icon U.S. Steel. The takeover has become an election flashpoint, and both Trump and Harris say they'll block it.
I would stop it if it hasn't been completed by the time I'm president.
U.S. Steel should remain American-owned and American-operated.
Still, Washington insists the Japan-U.S. alliance will remain intact, even as both countries' new leaders may need to recalculate ties.
Japan's relation with the United States is bigger, deeper than one financial or business transaction.
Let's take a look at how Asian markets are faring in really a start of the week that is fraught with political risks. The Nikkei 225 actually reversing some of those that weakness at the start of the trading session. We're seeing upside of about 1.7% there. The yen falling to that 3-month low against the dollar. Investors kind of reacting to the Liberal Democratic Party losing its majority, but that upside in Japanese equities perhaps not as expected there. Australian stocks are holding steady at the moment. We are seeing some laggards when it comes to the CBA as being one of the big losers, and energy names there trailing as well. To China, and the Vice Finance Minister telling Bloomberg that the much-anticipated fiscal policies from Beijing will aim to boost consumption as part of a stimulus push he describes as quite large. Our Chief North Asia correspondent Stephen Angle is with us. So, quite large. Is it going to be effective? I guess, everyone wants to know more about this because, yes, obviously the intent is to boost consumer confidence.
Well, we're in a further holding pattern now because Liao Min also told us that nothing will come out of the National People's Congress Standing Committee until its conclusion. It's going to be held next week, November 4th to 8th. So we have to wait till the end of next week if we're going to get those details of the fiscal spending. But as I was just watching, of course, Shery On's piece about the U.S. election in Japan, so many people have been asking how much impact, obviously, will the U.S. election have on China and its policy? Have they waited sort of until after they know what the election results are going to be? Well, perhaps. But more importantly to the Chinese economy right now than the U.S. election is policy support. And that's what everybody's looking for. So we've had the raft of monetary stimulus coming in the form, of course, cuts in reserve ratio requirements, which allow banks to lend more. Obviously, rate cuts, loan prime rate cuts, housing support. But there haven't been a lot of policies to create demand with consumption. And that is something we have a quote we can bring up from Liao Min. He's the vice finance minister telling Bloomberg News on the sidelines of the IMF World Bank meetings. This size a round of policies will be quite large in scale, as you mentioned, Haidi. And we can turn the page, and that's why we're looking again at the National People's Congress Standing Committee. And he basically says there is a legal process to go through for China's fiscal policy. The NPC Standing Committee, of course, we all know the National People's Congress is the top lawmaking body in China. They meet every March, but they also meet every other month, even months, to essentially approve of spending, right? So fiscal spending, we don't know. Let the speculation begin. Is it going to be 3 trillion yuan, as Citibank analysts suggest? Or is it going to be 5 trillion yuan, as Goldman Sachs analysts say, over multiple years? We simply don't know, but everybody's watching it. I've gotten emails from clients and viewers saying, when is this going to happen? Are we going to get something? I don't know. I wish I was inside the halls of the Great Hall of the People or inside the conclave where they're going to be meeting behind closed doors for 4 days. But we'll be waiting on that Friday, November 8th.
Yeah, and how you characterize that. Is it the whatever it takes moment? But in the meantime, we know that the deflationary spiral has already set in.
24 consecutive months of factory gate deflation in China, and that is really taking its toll on industrial profits. As we've seen in the latest numbers that we got from the National Bureau of Statistics Sunday, look at that. I mean, yes, there are base effects here, but again, 27 0.1% down in combined industrial profits in China. You know, there's lots of talk about overcapacity, and that is eroding profitability, but that deflationary cycle that we're in of 2 consecutive years of deflation really hurting pricing power and the profitability, following, of course, a more than 17% decline year over year in industrial profits in August. So, again, they need demand. It's a chicken and egg situation. They need demand to help end that deflationary spiral. But how are you going to do that? That's why all eyes, I come circling back to this fiscal spending and what number is it going to be and where is it going to be targeted to help boost consumption.
Chief North Asia correspondent Stephen Engel there as we take a look at, of course, a brand new trading week when it comes to Chinese equities. And it is really that heavy focus on earnings as well. 323 companies reporting in the MSCI China Index this week. That totals about $5.7 trillion in market cap. Some of those companies, including the big oil giants, the mega banks, some of the big pharma names as well, will be coming through with those numbers. So it is starting to get that sense that it's not just a fiscal stimulus and monetary policy stimulus driven rebound that we've seen in equities, and this next leg will be looking at how these earnings assumptions are going to play into the level of bullishness that we might see in this Chinese equities rebound story. It's not just China. Asia entering its busiest week for earnings there. Those are big Chinese and Hong Kong listed banks are due with their numbers, and traders will likely be looking for any clues on the potential impact of Beijing stimulus measures. Bloomberg finance editor Adam Haig joins us now. So, Adam, what do we know at this point in terms of the impact, if any, that we've seen so far of the policy moves on banking profitability and also the banking outlook in China?
Yeah, Heidi, I think that's really the crux of what we'll want to be finding out this quarter is that we've had that latest recent policy response, but have we had enough information for that to really feed through to give investors a full sense of whether it's worth adding to positions in some of these banks? And I think that's really what we'll be looking out for the next few days. We've got Agbank, of course, Bank of China, ICBC, and China Construction Bank. So that sense that the benchmark lending and deposit rates have already come down. We already have the June data, which is the most recent data, obviously just reaffirming that sense of net interest margins still at an incredibly depressed level. So any sense or any commentary around whether there's a change in that impetus that might give some relief to margins is really what investors will be looking out for in the coming days. And of course, there might be some CEO macro commentary around that, but really on an individual level, how those banks are performing regionally across the country might give us a little bit more information. But of course, we've not just got those Chinese banks. There are banks in other parts of the world at the back end of this week. We have Nishimura out of Japan on the broker side, and we have Australia's big investment bank Macquarie as well. So there is quite a lot on the macro landscape as well to feed into what we're hearing from banks on a micro level.
Yeah, and for Asia, particularly emerging Asia, HSBC and Standard Chartered are, two that we're looking at closely. HSBC, particularly when it comes to this recent announcement of this East-West split, if you will.
Yeah, I feel like there's still a lot more to learn from what El Hedri is doing at HSBC. I mean, we've already got some broad kind of platitudes around some changes that are making, and clearly quite significant ones with senior and middle management at HSBC. But I think it did leave a lot of questions begged around some of the more of the granularity about some of the things that he's doing there. So we will be looking for some more details on that from HSBC. And with regard to Standard Chartered, there is an expectation that we will get some more details on that $5 billion capital return program, the next steps there, and how the bank is seeing spending, because there is an expectation that you'll get a jump in margins after having a pretty big squeeze to net interest income in recent quarters. So I think they're the key details there, both for HSBC and Standard Chartered.
Bloomberg's finance editor Adam Haig there with the latest, and of course ahead of a busy earnings week for Asia and China in particular. We do have much more ahead on the Asia trade. This is Bloomberg. Take a look at the downside when it comes to energy prices, and we are seeing Citi cutting its 12-month oil forecast to $60. That's for Brent, of course, as these Middle East risk, in their view, are fading, according to those Citi analysts, saying that the Israeli military action against Iran at the weekend is, quote, unlikely to be seen by the market as leading to an escalation that impacts oil supply. Out of those revisions, prompted 3-month Brent outlook being cut to $70 from $74, a 6 to 12-month outlook reduced to $60 from $72. Still, though, they flagged that risks remain. They assigned a 10% probability of a major spike in oil prices, but that's down from 20% in an earlier forecast. And we've seen at the same time hedge funds slashing those bullish bets on US oil by the most in 14 years. Really, it's much more about that looming supply glut. They're overshadowing the tensions ongoing, of course, in the Middle East. Well, here in Hong Kong, the FinTech Week begins today, bringing together international leaders in finance and technology. Our tech reporter, Annabelle Jewellers, is at the event and standing by with our next guest. Belle.
Thanks, Heidi. Yeah, joined this morning by Tom Farley. He's the CEO of Bullish, which is an institutional exchange for investors. But I want to kick off with what's actually just wrapped in the last few minutes, which is Trump holding a rally at Madison Square Garden in New York. And it's been so interesting to watch the dynamics around crypto prices, because it's really seemed to have quite a positive correlation between the odds of Trump entering the White House again and Bitcoin prices rising in particular. That's sort of given up maybe a little bit in the last few days, but what is your interpretation of the market dynamics right now?
Hi, Annabelle. I'm a bit jet lagged, so I was up early this morning and I turned on the Trump rally, and it was like a rock concert. It was Howard Lutnick of Cantor Fitzgerald introduced Elon to a thunderous applause, introduced Melania, introduced Donald Trump. It was. I live in New York City. I'm about 15 blocks south of Madison Square Garden. I get there quite a bit for concerts and Knicks games, and it felt like that. It was something. I think there's two different paths here that are pretty starkly different from one another. If President Trump wins, he will be a crypto-friendly president. It will be a crypto-friendly administration. I suspect the SEC chair will have as a top priority, maybe the top priority, but certainly a top priority, providing regulatory clarity for crypto, embracing digital assets innovation, doing their level best, him or her level best to inspire innovation in digital assets in the United States. If Vice President Harris wins, it will be very interesting. The chatter in the industry is that she will look to put in place a new SEC chair who will be more crypto-friendly, perhaps not as crypto-friendly as that under former President Trump. Should he win? I'm not so sure. Chairman Gensler's term runs for quite a while. Chairman Gensler is very well respected by the far left, Senator Warren, Senator Sanders, and others. So certainly it's a stark difference between the two, and even with Vice President Harris, there's two pretty potentially divergent paths there.
But why don't you trust what she's saying when she says that she's going to be more pro crypto or pro regulation at least? Why is that not something that gives you any sort of credibility, I guess?
Actually, she has not said that, and that's why. So if you speak to her people privately, as I have, they will wink and nod that, hey, trust us, we're going to be a lot more friendly to digital assets in this administration than the current administration. However, we can't speak about that publicly because we're holding together this coalition that includes folks on the far left who, frankly, don't want to see anything good happen to the digital assets industry. So there's a little bit of a leap of faith that Vice President Harris, the winks and the nods will come to fruition, and we'll see that sort of positive movement. And I'm not so sure. Chairman Gensler has shown no signs that he wants to provide regulatory clarity. His term doesn't expire till 2026. So look, I guess what I'm saying is we don't know what's going to happen. We're just keeping our heads down. At Bullish, we're a global exchange, international exchange. We don't have U.S. clients for this exact reason. We've just said, okay, until there's more regulatory clarity, we've chosen to stay out. Instead, we're in many, many countries, something like 55 all around the world, but we're keeping a close eye on it.
Trump is someone who has personal links to the crypto industry. Do you see any sort of risk from someone being back in the White House that also has, for instance, links to the latest one is the World Liberty Financial DeFi project, but is there any sort of concern that there's a real conflict for interest that could be here, or conflict of interest?
Yeah, I'm going to punt on answering that question, not because I'm being cagey. I actually haven't paid too much attention to the world financial issue. Bullish owns a media business called CoinDesk, which is perhaps the leader for digital assets. We've covered it extensively, and I truly have not paid attention to that particular thing. I think the question about President Trump was not very friendly to crypto when he was president. Now, candidate Trump pivoted around about 3 months ago and said, hey, look, I've seen the light and I'm very favorable. And there are some people that believe if he should win this election, it's actually that pivot that will push him over the top because so much money came in supporting him in the digital assets industry. So I have no doubt that if former President Trump wins this election, you will see a crypto-friendly, reasonably crypto-friendly, I hope. I hope there's reasonable regulation. I hope we root out scammers. I hope that we see a mature and compliant growth of the industry in the United States.
What about the flip side? Because even if you have that greater regulation that comes in, the concern with a lot of Trump's policies is that it could leave the US with more debt, higher inflation, higher interest rates as a result. We've seen crypto also rising with the anticipation around Fed rate cuts. Do you see that sort of trade dissipating at all?
I've been in markets my entire career. I've seen markets go from unregulated to regulated. The one that jumps to mind is OTC energy, OTC commodities. Once you have sensible regulation, the markets take off. So I have no concern about sensible regulation. In fact, we're sitting here in Hong Kong. Hong Kong is doing exactly that. And I give the Hong Kong regulator a lot of credit. They've laid out, the SFC, they've laid out a clear crypto regime, and we love that. Even though it's tough, it's a tough regime, we're applying, we've been deemed so far, we're actually investing millions of dollars to launch Consensus Hong Kong, our conference that we own, February 19th and 20th. We think this model is a really good model. I'd love to see something similar in the United States, whether Vice President Harris wins or former President Trump wins. That would be my hope.
I'm curious about what your Hong Kong application, because as you said, you're approved in principle. There's around 13 that are on that list, so waiting for clearance essentially from the SFC, the regulator here. The SFC seems to have done maybe a round of checks on some of those applicants a few months ago, and they found that maybe some of them were contravening the rules, and so it seems to have really slowed down. Do you have any sort of timeline for when you would be fully greenlit?
I don't know what I'm allowed to say or supposed to say. All I'll tell you is we've had a really good process with the SFC. It is not easy. It is an examination. They want to look at absolutely everything. They're looking to protect the Hong Kong consumer. I get the feeling like they appreciate the way we look at the world. We set up to be an adult compliant exchange because our worldview is those types of businesses will be the winners long-term in digital assets when this industry blossoms, as this industry blossoms. That didn't always feel good when we were seeing unregulated businesses, many of them scammy, growing so quickly. But guess what? The world's coming around. And so our approach with regulators like the SFC is by and large welcomed. I don't want to be too specific because I don't want to jinx anything here in Hong Kong. But look, it's not easy and it's taking time, but it feels good to me.
All right, Tom, thanks very much for your time. That was Tom Farley there from Bullish. Haidi, of course, one of the exchange applicants here in Hong Kong that's deemed to have that license perhaps to be greenlit at some point in the future, but we'll see. That was Tom Farley there, Haidi.
Annabelle Drill is there at Hong Kong FinTech Week. Take a look at one of the stock movers in Japan that we're focusing on very closely is Olympus. We're seeing that stock extending those losses now down over 6% after Olympus's CEO, Stephen Kaufman, resigned due to an allegation of purchasing illegal drugs. That resignation effective immediately. The chairman, Yasuo Takeuchi, acting now as interim CEO. So we're seeing that extended slide when it comes to Olympus there. His departure coming less than 2 years at the helm, and Kaufman really was one of the few foreign CEOs heading up the blue chip Japanese company. So we'll continue to watch that story as the details emerge. More ahead on the Asia trade. This is Bloomberg. Take a look at how Asian benchmarks are faring and what is a political risk-heavy start to the trading week. Not to mention, of course, we're getting several key U.S. eco data gauges ahead of the Fed decision as well. The PCE index as well as the jobs numbers expected to be keenly in focus. We are seeing the Nikkei 225 Japanese equities perhaps surprisingly actually seeing upside, 1.5% higher there. The yen, of course, seeing that sustained weakness down about 7% over the past month now on the political uncertainty ahead for the LDP coalition. We are seeing Taiwan as well as US futures looking mildly positive. China futures a little bit softer. A big earnings week for Hong Kong and mainland China. This is Bloomberg.